One.
Hey everyone, I'm Jun, a researcher with The Expert. Walmart and Home Depot are often regarded as an indicator of the overall consumer well-being in the US. Given their status as the two of the largest retailers in the nation, let's dig into their earnings report to uncover any insights or clues about the state of the consumer market. Walmart's US saw a 4% uptick in comparable sales for the quarter ending January 26, surpassing Wall Street's modest 3.2% prediction. Customers lean towards essential rather than luxuries, evident in the growth of grocery and health products, but a slight dip in higher margin general merchandise sales. This trend has been a persistent challenge for Walmart's profit margins, which at 23.3% last quarter were slightly below expectations and down from pre-pandemic levels of 24%. Operating margins also missed the mark, coming in at 3.5% compared to the anticipated 4%. However, despite this margins pressure, Walmart managed to outperform earnings forecasts, with earnings per share climbing 5.3% year over year to $1.80, a pleasant surprise compared to the expected 4.1% decline. Adjusted operating income for the company also saw a healthy 13.2% increase year over year, surpassing the 5.6% growth in net sales. To counterbalance shrinking gross margins, Walmart has started to focus on alternative revenue streams like advertising and online marketplace sales as they become increasingly crucial. While there are signs of progress in these areas, they haven't fully offset the impact of the shift towards lower margin products. Walmart reported a 20% rise in global membership income for the full year, along with a 28% increase in global advertising revenue to $3.4 billion. An impressive figure, albeit slightly slower growth compared to the previous year's 30% expansion. Walmart is eyeing growth through acquisitions, signaling a move towards inorganic expansion. However, the path to margin improvement doesn't hinge on reverting to a heavier focus on general merchandise. In fact, Walmart emphasized during its earnings calls that general merchandise is likely to maintain a lower proportion compared to food in the future. This puts even greater emphasis on Walmart's ability to capitalize on its new revenue streams. The company anticipates that global advertising and membership will contribute significantly to annual operating income, aiming for them to represent a fifth of the total this fiscal year. The recent purchase of Vizio, a smart television manufacturer, holds promise for Walmart's advertising division. This acquisition should bolster Walmart's advertising business by providing access to additional advertising space and valuable viewership data. Now, let's shift our focus to Home Depot, offering us a peek into the current state of the consumer landscape in the US. Home Depot continues to grapple with a slowdown in home improvement, reflecting a broader trend of easing spending post-pandemic. Ted Decker, the CEO, acknowledged that 2023 marked a shift to more moderate growth after the unprecedented surge during the pandemic. This adjustment was anticipated, with the company signaling in May that annual sales might dip for the first time since 2009. As forecasted, annual sales decreased by 3% in the fiscal year ending January 28. In the last quarter of fiscal 2023, Home Depot saw a nearly 3% decrease in sales, attributed to both In the last quarter of fiscal 2023, Home Depot saw a nearly 3% decrease in sales, attributed to both a decrease in customer transaction and the size of those transactions. Despite this decline, sales surpassed analyst expectations, according to FactSet. Operating expenses for the period increased. Operating expenses for the period increased, impacting the company's profitability, leading to a more than 40% drop in quarterly earnings to $2.82 per share. Though this decline was less severe than analysts has predicted. Here's a breakdown of Home Depot last quarter's result. Sales decreased by 2.9% to $34.79 billion, surpassing analyst predictions of $34.64 billion as per FactSet. Profit declined by 16.7% to $2.8 billion. Quarterly earnings were $2.82 per share, down from $3.30 per share the previous year, yet still beating analyst projections of $2.77 beating analyst projections of $2.70 beating analyst projection of $2.77 beating analyst projections of $2.77 per share, beating analyst projections of $2.77 beating analyst projections of $2.77 per share. Looking ahead, Home Depot anticipates a 1% increase in revenue for the current fiscal year, but expects comparable sales to decrease by about 1%. As observed in the reports, both major retailers' consumer spending has started to taper off, potentially leading to deflationary pressures. However, Walmart noted that price for some of its products did decrease as anticipated in the latest quarter, highlighting the persistent inflationary environment in the US. Walmart CEO Doug McMillon had previously suggested in November that the retail giant might enter a period of deflation in early 2024, a sentiment that could be seen as positive for the overall economy given Walmart's status as a barometer of consumer sentiment. During the 3 months ending January, McMillon noted that while general merchandise prices were indeed lower compared to the previous year, the rate of decline was less steep than anticipated based on previous trends. Additionally, price of food and consumables were slightly higher than a year ago. These remarks from McMillon come on the heels of official data showing that inflation in the US moderated less than anticipated in January, leading investors to rethink their expectations regarding the Federal Reserve timeline for adjusting monetary policy, with some scaling back bets on early policy easing. Let's dive into monetary policy and see what's the probability of interest rates in the upcoming FOMC meetings. As of February 22, 2024, the market is betting on 3 rate cuts this year, kicking off in July, followed by September and then December, with the fourth cut coming in early 2025. It's worth noting that these cuts are significantly delayed from what the market had anticipated just a few weeks ago. In the latest FOMC meeting, Federal Reserve officials urged caution against rushing into rate cuts too hastily. According to the minutes from the most recent meeting, Fed officials signaled they weren't in any rush to slash interest rates, striking a balance between optimism and wariness regarding inflation. The gist? They are cautious about jumping the gun on easing policy and stress the need to carefully monitor incoming data to gauge whether inflation is truly heading towards the 2% mark sustainably. In discussing the outlook, Fed officials reckon that the policy rate had likely hit its peak for this tightening cycle. However, they also emphasized that they weren't keen on reducing the target range for the federal funds rate until they were more confident that inflation was making steady progress towards that 2% goal. Despite a slight slowdown in the housing market in 2020, Despite a slight slowdown in the housing market in 2022, which has otherwise remained consistently stable, in some areas of concern, such as the used car and truck market, along with energy prices affecting the CPI or Consumer Price Index, it's no surprise that both Walmart and Home Depot are projecting a relatively steady outlook for 2024. Walmart anticipates sales growth of 3% to 4% for fiscal 2025, a bit slower than the previous year. Their adjusted earnings forecast range between $6.70 Earnings forecast range between $6.70 and $7.12 per share, slightly below analyst consensus estimates of $7.09. On the other hand, Home Depot reported a quarterly decline in the Home Depot reported a quarterly decline in its key sales metrics and expects an annual decrease for the coming year, attributing it to consumer holding off a big-ticket purchase amid high mortgage rates. Their projections for a 1% drop in the same-store sales for 2024 fall short of expectations, with suppliers also forecasting flat remodeling activity for the year. The company faces pressure from reduced spending on major discretionary items like flooring and cabinetry, although smaller projects remain robust. In the near term, the industry is expected to transition from high spending levels, grapple with inflation, and cope with subdued housing activity. However, both companies forecast market improvement as the year progresses, particularly with better growth anticipated in 2025. Factors such as a rebound in home sales, increased equity, and aging housing infrastructures presents opportunities for the industry. Home Depot's strategic focus on investments in professional contractors, retail outlets, and e-commerce positions it well to capitalize on these trends. With that being said, here are some price targets provided by analysts from various banks for your consideration. Remember that Walmart and Home Depot are included in the S&P 500 and the Dow Jones Industrial Average, or US 30. Thanks for joining me today. I hope you have gained insights for today's video. Everything I've shared are information that I've picked up and learned, sprinkled with a bit of my takes on things. When it comes to trading or investing, do your own due diligence and be mindful of the risk. If you find this video helpful for your research, please subscribe, share, and like. Quickly access to all our channels by scanning the QR code. Take care, and I'll see you in the next episode.